Saturday, April 19th, 2025, Maneco 64, home of alternative economics and contrarian views. Well, I've been asked many times and I've spoken many times about the reset. And in my opinion, the monetary reset continues. And how does that work? Well, we continue to see the price of gold rise versus all fiat currencies. And I think as this monetary reset proceeds, the mining companies, gold and silver for that matter, they will provide the QE for the future. Yes, it might sound strange, but that's how it used to be during the gold standard. And as we move away from the dollar as a major reserve currency or fiat currency, gold will come back. And that's why central banks are buying so much of this stuff. Before we look into the monetary reset in more detail, just wanted to let you know that we're going to be looking at a very interesting opportunity in the junior exploration gold and copper mining sector. So the last two resets we've had in the last 100 years have been 1932 and 1980. Both times we saw the Dow gold ratio go very near to 1-to-1. In 1932, we got down to 2-to-1. In 1980, we did get down just above 1-to-1. And I think the same thing's going to happen now. As you can see by this chart, the Dow gold ratio has recently really accelerated lower. We're below 12. And I think, eventually it's going to go to at least 1-to-1. And why is that important in terms of the reset? Well, because it will mean that the credit, the unwinding of the credit bubble will have occurred. It occurred in 1932, and then in 1980, and then the system started, reliquifying again. The credit cycle, a new credit cycle started. And gold is a very important part of this, of course, because even though the public hasn't been involved in the gold market as much as they were involved, let's say, in the last 2 years of the gold bull market in the 1970s, we've seen that central banks, they've been accumulating gold hand over fist, especially since 2022, but also since after the '08 crisis. And I think they're going to continue to do that. You can see that gold reserves as a percentage of foreign exchange reserves has even surpassed euro reserves. Gold will again become top dog, in my opinion. And just like in the 70s, though, I think we're going to have a period of stagflation as well. Even the chairman of the Federal Reserve, Jay Powell, recently said that we're basically going to have stagflation. There will be a combination of the tariffs impacting prices, but also if you look at M2 here, a global money supply from Bloomberg, and I calculated it's gone up 16% since the beginning of 2025. So Jay Powell might say that it's because of tariffs, but I think the central banks are starting to print again, to loosen monetary policy. We saw this past week that the ECB cut rates again. The Fed's holding on a little bit, but eventually they'll have to cut. So I just wanted to show you what happened in the junior mining sector back in 1979 to 1980. As you can see here, returns of juniors in 79 to 80 mania, and they even had a bull market in the mid-90s. And you'd think that gold at the time was doing nothing, but the miners had a bull market. Now let's look at the opportunity in the junior mining exploration sector. It's not just a gold play, but also a copper play. And we saw as well in the 70s during the stagflationary period that the general commodities did well as well. So I think it's a really interesting play. So I'd like to thank Abitibi Metals Corp for partnering with my channel. The ticker symbol is AMQ in Canada, and in the US, OTC market is AMQFF. The company's properties, they're located in the heart of Canada, and it lies in the Abitibi Greenstone Belt, which stretches from Western Ontario to the Val d'Or in Quebec. And it's recognized as the largest gold district in Canada. It's yielded over 100 mines and 200 million ounces of gold since 1901, 35 billion pounds of zinc, 15 billion pounds of copper, and 400 million ounces of silver. So it's a polymetallic project. And the focus for Abitibi Metals is copper and gold, which fits right in to this monetary reset and this stagflationary environment. So the company is focused on exploration and mineral acquisition. They're also focused on the development of quality base and precious metals properties that are drill ready with high upside and expansion potential. And they're committed, of course, to unleashing shareholder value. So how are they going to do that? That's what we're going to look at now. One of the ways they're going to try to maximize shareholder value is through drilling and updating their flagship B26 deposit. They already achieved a 63% increase in indicated resources in 2024, highlighting the deposit's expansion potential. So in 2024, they updated their copper resource to 550 million pounds and their gold deposit or resource to 370,000 ounces. And they've got $10.5 million in cash on the balance sheet. So they're fully funded for a targeted 20,000 meter drill program in 2025. And they also have world-class management and advisory team with over 100 years of combined experience in mining. So let's quickly look at the management team. We've got John DeLuz, CEO and president. John is a chartered accountant with over a decade experience in mineral exploration and the capital markets. As CEO, Mr. DeLuz is also involved in the company's marketing, financing, and corporate development. During his time as an executive, he has successfully negotiated option and joint venture partnerships with multiple senior companies, including Kirkland Lake Gold and Barrick. He has developed long-standing relationships with an extensive network of high net worth retail investors, brokers, and institutions. So let's look at the share ownership of the company. Well, you've got management ownership that is 17% of the shareholding. You've got the DeLuz family, which owns 11%. And you've got high net worth strategic shareholders like Frank Justra and others that hold 29% of the company. Institutions own about 8%. And the public float is only 26%. So it's a tightly held company. And yes, they're putting their money where their mouth is, so to speak. Let's look at the valuation disconnect between Abitibi Metals Corp and Foran Mining Corporation, between the B26 project and the McIlvenna Bay project. As you can see, Foran Mining is developing a similar VMS deposit, and it trades at 3,472% roughly premium relative to Abitibi's B26 deposit on a copper equivalent pound basis. So yes, there's a lot of potential there for catching up with foreign mining corporation's Makovina Bay project. So if you want to find out more about Abitibi Metals Corp, go to the description of this video. There will be a link to their website, and there you can look at their corporate presentation, the fact sheet. And I like to say as well that yes, junior mining investments are risky, but they can be very profitable. As you saw earlier from that that list of how well the junior miners did from 1979 to 1980 during the last reset and the last stagflationary period. So yes, make sure you do your own research and due diligence, and keep in mind that this is a risky proposition with quite a bit of upside potential, of course. And just before I finish off, the ticker symbol in Canada on the CSE is AMQ. The ticker symbol in the US in the OTC market is AMQFF. And with that, I'm going to wish you all a very good rest of the weekend. Take care. Bye.